Total cash receipts 3,975,400. Transfer 3,975,400. Look at this. Cash receipts, therefore a positive. This is an inflow into our bank account. Cash paid, we need to complete our inventory and our trade payables. If you look at my inventory calculation number 5, the balancing figure 3960. If we debit our inventory, we credit bank, therefore a decrease. And let's transfer this to our calculation number 2. It's calculation 5, and this is 3960. Decrease, right, an outflow. Then our trade payables, which is our calculation number 15. When you look at the bottom, trade payables, also on the debit side. Now think about this. Debit, trade payables, we credit our bank. If we credit bank, our bank decrease with an amount of 163,130. Therefore, let's transfer this. 163,130, and this is calculation 15. Total cash paid 2,937,649. Transfer 2,937,649, and this is an outflow, cash paid. Then our interest paid, we've calculated. Dividends paid. Dividends paid. Now remember, to be able to calculate our dividends paid, we had to reconcile our shareholders for dividends and our NCI. Therefore, if we refer to our shareholders for dividends calculation, I just want to find this here, shareholders for dividends. This is calculation 13 at the top. But before we were able to complete this, we had to complete our NCI. Calculation 12 at the bottom of your screen. You will be able to identify our reconciling amount in our non-controlling interest was 87084. Therefore, transfer 87084, calculation 12, and our balancing figure is 40829. Now, if you look at this again, we debit our bank and credit our shareholders for dividends. Therefore, if we debit bank, our bank increase. And transfer 40829, calculation 13. It's calculation 13, and this is 40829. Our bank increase. This is a debit. Right. We have included our interest received. Now, dividends received. I want you to look at calculation 3, investment and associates. Now, before you look at the amounts, please refer to the left side of your screen for me. If we have our investor that owns shares in the associate, basic example again, and our associate declares dividends, in the records, in the separate financial statements of the associate will debit retained earnings, credit dividends paid, right? Then, in the records of the investor, our investor will debit bank increase and credit dividends received and income in profit and loss. Now, our elimination journal, when you look at the right side, we need to eliminate the portion relating to the dividends received, credit, therefore debit in the group, and our associate, we include percentage of the net asset value. Therefore, if they have credited the dividend paid, dividend for shareholders, we will have to credit our investment because this will decrease. Liability, it will decrease. And we credit our 4,400 dividend. Therefore, dividend received. And let's transfer this calculation. Number 3, dividends received. And this is 4400, and this is an inflow. Now, income taxes, remember, first complete your deferred tax T account, then complete your tax payable. Your deferred tax is non-cash, right? Now, if we have a look at our deferred tax calculation, this will be our T account number 16, T account 16. Our balancing figure is 8203, and we transfer this to our tax payable 8203. And our tax payable will have a balance of 512663. Therefore, again, we debit our tax payable, decrease, and we credit our bank. This is a decrease. Calculation 17, 512663, decrease. Look at this, minus. Right, we've now completed our cash flows from operating activities. Let's move on to our cash flows from investing activities. Now, when we refer to our T accounts, first we are able to identify calculation 1, land. On the debit side, we have an amount of 228085, and when you refer to our plant and equipment, on the debit side, 459305. Again, both of these amounts are included on the debit side. Therefore, if we debit our PPE, land, credit our bank, this is purchase, acquisition. This is the 228085 plus the 459305, and we are able to transfer our total 687390. Right, if we move on, 687390, this is an outflow, and I'm going to indicate calculation 3 plus calculation 4. Now, if they have a look at our calculation 3 plus 4, no, 1 plus 2, guys, you actually see here that I have included calculation 1, calculation 2. It's a double. But it's not that bad because at least I have included plant and equipment, my headings, right? Okay, so that might be a little bit confusing. So what I'm going to do here is now I'm just going to indicate to my marker that I have identified this. I'm going to indicate land T account plus plant and equipment T account. 1, 2. Now guys, this does happen with you as well. See what I'm doing? I'm just trying to still indicate to my marker where these amounts are allocated, and then ensure that my marker are able to see orange on the left, orange on my cash flow statement. Right, I've completed my cash flows from investing activities, cash flows from financing activities. I still need to include my loan repayment. Therefore, if I refer to my loan, long-term loan, I'm able to identify on the debit side 876,500. We debit the loan, we credit our bank 896,500, 896,500. This is an outflow. Identify that this is calculation 14. This is my calculation 14. Right. Now, I need to ensure that I have completed all of my calculations. I've completed my cash receipts as well as my cash paid. I've completed and transferred my land, my plant, and my investment and associates. I've transferred my inventory and my trade receivables, just completed via the investment sold. Non-current assets held for sale, not needed. Foreign currency translation reserve, yes. Happiness, mark-to-market reserve, I didn't need this. Yes, I've wasted a little bit of time by transferring the information. I know that. But at that point of time, it were easier to just transfer the information compared to coming back to it, right? Retained earnings, I did not need this. Why? Because they've provided me with the dividends declared. If they did not provide the dividends declared, then I had to reconcile my retained earnings. Revaluation surplus, I did need this because it related to land, but I've completed this. NCI, I've transferred. shareholders for dividends, I've transferred, long-term loan transferred, trade payables transferred, and then my deferred tax and tax payable. Right, we have answered the question. Now, my recommendation, guys, if you're running out of time, just write down any amount here. Don't use your calculator. Just try and write down an amount or add the difference between these two and include an amount and move on. Guys, cash flow statements has a lot of easy marks, but you need to focus on exam technique to be able to score the easy marks.